Hey everyone, I'm Bradford, the penny pincher out of personal finance. You've probably heard that once you have a mortgage or if you start a side hustle business, you'll be able to drastically reduce how much you owe in taxes. But while those do count as deductions, you might still be better off taking the standard deduction, in which case those things won't impact how much you owe at all. Over the next couple of minutes, my goal is to help you understand whether the standard deduction or itemizing your deductions is going to help you save the most money. But first, make sure you hit that like button so you know to make more videos like it. Let's start with the basics. What is a standard deduction? The standard deduction is the amount set forth by the IRS that anyone who files taxes can use to reduce their taxable income. The exact amount is set each year and will vary depending on your filing status. For 2021, if you were filing a single, the standard deduction was $12,550. Say you made $50,000 last year and you took the standard deduction, you would only be paying a federal income tax on $37,450. Standard deduction is super simple because all you have to do is take the amount that corresponds to your filing status and subtract it from how much money you made last year. And because of the tax cuts that were passed in 2017 and how much the standard deduction was increased, most people will be better off taking the standard deduction as opposed to itemizing their deductions. Now for the itemized deduction, as the name implies, you're going to be taking all of your taxable expenses over the past year, adding them up and subtracting them from your income. But what expenses are considered tax deductible? For that, you're going to have to look at IRS Form 1040 Schedule A and its associated instructions. Now here we have the Form 1040 Schedule A. Now I'm going to quickly break down what are some of the things it covers, but if you really want to understand what is tax deductible and what is not, please reference the Schedule A instructions that I've linked down below. The first thing that talks about is going to be medical and dental expenses. Not all medical expenses are tax deductible, so again, please reference the instructions. Other thing is going to be taxes you paid, and there's going to be state and local taxes, could be property taxes, could be sales tax when you go to the grocery store. Please note this is capped at $10,000. Other thing that's going to be applicable to a lot of people that own a home is going to be your interest expenses. So this is going to be any interest that you pay on your mortgage. If you're sole proprietor and you took out a loan for business, any interest you pay on that is going to be considered tax deductible. Gifts to charity, if you tithe to your local church, that's going to go in this category right here. Make sure you're following the rules as laid out in the Schedule A instructions. Casualty and theft loss, this is going to be from a federally declared disaster. So there's a big earthquake, or if you have a hurricane roll through, that could be applicable in this category. Other itemized deductions as laid out by the Schedule A instructions. And you're basically going to roll through, add all of these up, and that's going to let you know how much you would have from your itemized deductions. Once you have the total added up, it's a pretty simple decision. Which number is bigger? Is it the standard deduction or your itemized deductions? If the two numbers are pretty similar, I would choose the standard deduction because in the event of an audit, you're never going to have to prove where that deduction came from because it's the standard deduction. If you do go with an itemized deduction and you're audited, you will have to prove and show exactly where those different deductions did come from. Now that you know which deduction is best for you, you still have to file your taxes. If you want to fill out the forms on your own, check out our walkthrough of the IRS Form 1040 right here. Or if you'd prefer to use a tax software instead, see if you qualify for the IRS Free File program. I want to thank you for joining me today, and until next time, just remember to pinch a little.